All right. Hello, hello, hello. Let me know if you guys can hear me. Should be good. Um, hold up. It's being slow. oh, oh, yeah. I need to do that. Hold on. Let's see. Let's pull this. Let's do stream. Whoops. There we go. Friday, Friday, Friday. Sorry, everything's a little hectic today. Jin's off from school. It's Melissa's first day back. The boy is thus far doing okay. He being good so far. Doing all right. Ah, there we go. Man, it's like talking to Todd forever today. There was like I'm going in 3 right off the bat. Let's go big or go home. It's so funny. Why is it not? Yeah. All right. It's being weird. All right. An error has occurred. All right. Let's see. Go back. 1 sec. I'm trying to. Let me click this. Let me click this. Create stream. Do this. Let's go here. Edit. Hold on, I'm trying to set up one of the streams here. It's not live studio. Go live. See if that works. Looks like it is. All right. I don't know. Things driving me crazy sometimes. All right, there we go. It looks like it's working now. All right. Where is it? This one? Yeah. All right. Cool. Sorry. It's one of those mornings. Sometimes it's like I just can't get things to Oh, now I'm hearing myself speak. All right. So non-farm morning. Obviously, kind of a funky number. A little bit of a revision up, a little bit of a revision down. CAD number was great, came in exactly at 5.9. Called that one. Markets, interesting reaction to it. I think in looking at the way that non-farm's been handled recently, we've had huge numbers on Wednesday and then disappointing numbers on Friday. It happened here, right? Happened today, happened in December, happened in October, happened in September. So what? 1, 2, 3, 4, 4 out of the last 5. We've had the same type scenario there. So it's interesting how non-farm. It seems like the ADP numbers really starting to pick up steam as being kind of a not the more important release, but the one that's having, I guess, more kind of control, right? Average earnings, great. I mean, again, they adjusted this higher, right? Last time it was zero point 0.3. It missed the forecast, but in reality, they didn't miss the forecast. It was actually right, right? And then they raised it by zero point 0.6. So again, actually, that's a little bit higher of a number, right? Because remember that they thought it was low, and then it came in above that. So 0.6 is a big number. It's great that they're paying people more. The non-farm number, yeah, it's red, right? It's not nearly as high as what the forecast was, but it's still positive, right? It's not negative. People weren't losing jobs; they were still going. And then again, the 3.9, and you're like, wait a second, how are we hiring less PAP and it's going to 3.9? Well, it just shows you that what was happening. People retired at the end of the year last year and never came back. They skipped 2021. Not that skipping 2021 would have been the worst thing to do, right? Um, but that's why you're seeing this number start to artificially drop now. I cannot wait till someone starts bragging about how great there's this one guy that he's like a friend of a friend. I don't talk to him, but he's like, this is the best president I've seen in my lifetime of voting. He's doing such a great job. Thank you for your hard work. I'm like, dude, I'm like, what? Like what? Like I'm waiting for him to talk about this one. I'm gonna be like, really? I'm like, all right, I'm gonna have to speak up on that. So the 3.9, although it looks wonderful on paper, it gives us actually no really discernible kind of knowledge whatsoever. Again, seeing it drop by point two is the big drop anyway, but in the middle of a pandemic and percentages this low, while you're getting less than expected employment, it's fake number. It's fake number. It's not fake news. It's not a number that's actually encompassing true data because when you understand how they put this number together, remember after you've been out of work for a year, you're no longer included. So the utilization rate is a much more important. The workforce utilization rate is a much more important data point right now. 10 years ago, you would look at this and celebrate like, yeah. But now with the pandemic, with people not working and everything else going on, unfortunately, this doesn't carry as much weight. So I'm surprised it's still a red at this point. I mean, people like it, but that doesn't mean it's actually giving us a true gauge. So the number of jobs hiring back is a much more important figure, which again was in the red, but again tempered with the increase from last time. Um, Right now in 24 hours, you look at this and say, wait a second, this is dead. Nothing's moving. And you'd be right. You wouldn't be wrong. The dollar Swiss is higher. Again, obviously it's retracing right now. Dollar yen down 12. That's nothing, right? Dollar CAD 28. What? It was actually a bit more than that earlier, right? But even the Aussie dollar only down 17, and obviously you can see that it's retracing. It's 0.37 has come up in the last 60 minutes, obviously since non-farm. So, for the most part, I think the market doesn't really know what to think. I think the market is still having FOMC hangover, which makes sense. I mean, remember, non-farm, it's a great data release, but it's what happened previously, right? FOMC meeting, that's what is about to happen. That's what the market is trying to adjust for. So I think that's the important thing. Non-farm is such a catchy slogan. Everyone's like, "Oh, we're going to trade NFP today. Join me for NFP releases." It's you know again, it's a data point that is in the past versus the FOMC change in monetary policy, which is going forward. So that's always going to win. So again, that's why I think we have a much more muted tape than possible. Some pretty cool setups across the board, though. I think one of the notables that we'll talk about in a second here is definitely oil. Things on the radar, though, to watch out for. I talked about this earlier. ECB acknowledging inflation. Now, why they're like, oh, we're going to see inflation fall this year. Yeah, you're going to have to raise interest rates. So you're going to have to jack the euro on that one, right? They're saying energy is a big deal. Again, it's up at 80. We know why the energy problem is there. But, certain countries, like the inflation figure in Ireland, 5.7%, that's kind of big, right? I mean, that's higher than I mean, I don't even. Unfortunately, it's not going to tell me how many years, but that's big. I mean, we're at 39-year highs. Europe in general is at 5%. The goal, and it talks about how, like, their goal and mandate is around 2%. They expect it to be 4.7. 5 is high. It's over 2 times what they want it to be. So, again, 2022 is going to be the year of raising interest rates. There's going to be a lot of currency fluctuation back and forth this year. Again, we're going to see the carriage rate step back into everything. It may say, you're looking at all these and saying, okay, that's great, but what does that really mean? That's why we're seeing the cryptos get destroyed. Okay, Bitcoin actually touched 41,000 today. Ethereum, it's down 6% now. It was down 7% earlier. Dogecoin down 4% as well. The reason you're seeing the destruction here is because you get absolutely nothing for holding these things. It's a purely speculator market. You don't get dividends from it. You don't get any of that kind of stuff. If you hold dollars, you actually do get those. You do get rates for those, by holding those. So as rates are starting to rise, they become a much more attractive place to put money. And that's why you're seeing gold. Gold's trying to squeak it out here. Gold is kind of trying to squeak it out. We'll cover that chart. There was actually the setup from 1782. If you guys got in at the 1782 this morning on the spike, you guys are already way past your 1 to 3. And again, we talked about that level yesterday, particularly for non-farm. But again, oil is pulling back a little bit, and I actually said that this would be a red number for oil. We'll break down into that even more. But this is one of those ones that after I saw it with less people working, I figured that the demand would be there and we'd have profit taking. And we do. We are absolutely seeing the profit taking. And again, a little bit late now, but that would have been a non-farm payroll short. So let's go right in the charts, and we'll start off with the Aussie up top. Now, the Aussie, I hate to say it, did not get an entry. You can see that it is rallying back off again. I think it's in the exact same place where it needed to be. Really did nothing. It kind of just went sideways yesterday, but we missed the entry. 71.27 was where we were looking for longs. Particularly, again, we marked it off. Look for news. Look for a spike down. And we missed it. Didn't miss it by much. What did I miss it by? 2.7? 2.7 pips I missed it by. It happens, not much I can really say about it. My alert went off, but my entry order never got triggered on that one. So Hopefully somebody got into it. Hopefully somebody else has kind of painted a little bit differently and you guys got in. But again, that's the reality. Sometimes you miss them. Sometimes they get front run. And again, I think it's a great little long now. I would be cautious. I think around, and again, the 23.6 was drawn from the bottom low over here. I get extended down, and that's kind of what we passed through. Um, from the initial 23, I'd watch the level that we're at and that we're kind of approaching right now. I'll leave it there because this was the initial that we had on there. Actually, you know what? I'll bring it down. It's fine. It works perfectly for what I need it for. Um, there's this level right here that I think you definitely need to watch. Confirmed sellers, and we're approaching it now that we're coming back up again. We're approaching it right now at the 10 o'clock time frame. Is it an area to short? It may be. Again, obviously, right now this is all Aussie push, but we're seeing gold really kind of start to come. Gold is rallying, which is helping the Aussie. But I think as we approach this 10:30 time frame, I think really people will focus back, and a lot of this probably has to do with the fact that the dollar is down right now, and they're like, "Oh, this is bad for the dollar." Well, here's the thing. Here's the area of buyers inside of the dollar. We were talking for it to go, looking for it to go up, and it did pop from that level, right? We're coming back to where the buyer stepped in last time at around 10 o'clock. The initial purse, and again, I knew that this was going to happen from the open. Again, the retail trader didn't have a chance, and now they're in. The dollar's getting ready to reverse again. Reverse, bring that back over the Aussie dollar. We're approaching a level where sellers were coming in. I think there's a possibility of again a short coming into this range here around 1776. Um, Again, we'll see. Like I said, I think we need to definitely make it the 10 o'clock time frame. There's no other news today, really. I mean, cat ivy is not going to really affect our this overall market, but I think it's definitely something we start getting some basic in here. Look to take those shorts and look to push back down again. Just because just because non-farm was 199, that doesn't mean the Fed's not going to raise interest rates, right? Inflation did not go backwards. They're like, hey, you know what? Inflation dropped by 2%, right? That's that's not what happened. They're still raising interest rates. There's still going to be kind of emphasis towards the dollar. So right now, I think a lot of this is kind of gold retracing from non-farm. I do think it comes back down and we hit low. And again, if you get in at 1776, your target needs to be the 71.27. Okay. Also yen. Also yen. Also, again, there was also basically in this one we had this overnight kind of a similar setup. We had an area that we had basing in there. It was right above the 23.6, but again, it was tested here, tested here. It hit late last night around 8 o'clock and continued to drive through to the European Open was right here is where it got closed out. We were still waiting for the opposing zone, which would have been a bunch lower. We do have a Harry Potter trade, the 82.54. Basically, a break below. You can see we have the alert sitting in there. When we do break it, we can come back to the chart, so we don't have to just leave it there and take capital out of the account. Right now, I would say you could. It's a similar trade. It's basically the same as the Aussie yen. I'm sorry, the Aussie dollar. We could refine it a little bit and say, hey, listen, we're going to move our zone here, right? We're going to move our zone here. I don't like that color. I'm going to have to mess with this a little bit later. We could say that we're going to use this new level in here, right? That zone comes in at approximately around 83.14. Again, it is a confirmed level here. So again, it's more or less the same area of sellers. The question is, do we want to take really a third hit from this level, or do we want to use this new refined zone because we had a nice drop at base and kind of a test of it? And then again, sellers step in to help drive that down again. So it's very, very similar, whether you like Aussie dollar or Aussie yen. I think either one of them are fine. Just remember, it is a Friday. So again, we are going to start getting really, really slow coming at that 12 o'clock time frame when the Europeans are out of the market and it's just us. Not that you can't trade it, but it is something, again, we'd be, watch out for. It's there, guys. Just be cautious of it. That's all I'm kind of saying. Now, with that said, if we do not get entry today, this is a potential area for like a Monday night or for a Sunday night open, right? If we can open up into this level in Sunday night, I would say that's a probably decent short, right? Going into the overnight into Monday morning. So there's some good trading opportunity up here for both these Aussie positions. Now, euro pound. All right, so yesterday we were sitting, let's see, the 6 at 9 a.m. We were sitting right here, okay? We talked about hitting that level up top, and we mentioned it coming all the way back down again. As you guys can see from yesterday, in the last 24 hours, it's come down. It's only, we're only talking about 28 pips, so I don't want everybody to look at this chart and be like, holy crap, how did you... It's only 28 pips, guys. It was a 50. It was not quite at the 50. It was the same kind of scenario with the basing. It was tested. It was tested. It was tested. It was hit number 4. But we expected to kind of roll back over as pound strength was coming back into the market. It went all the way down and it absolutely hit the target we were looking for down below. You guys can see that it creeped in there late last night. And then again, the 3 o'clock open was already kind of up here. It already moved around. You would have taken another entry again, but right now we're kind of in between these two zones. It is 12 from the top and 15 from the bottom. What can we do with it? I would say probably not much. There's probably not really much more you can do with the euro pound. These markets only have, I mean, end of day for them is in 2 hours. Going into a weekend, there's not going to be enough movement from now till the end of our trading session to really trade much with it. I think both of these levels still need to be respected. It would be nice in the next 2 hours if we kind of went down and laid on one of those two areas. Obviously, the big perk in this one right now popping up is everything that we saw from Lane talking about, inflation, inflation, inflation. Holy crap, it's 5%. Right? That's why we're seeing some strength come back into this market, and as it should. I mean, I think it's absolutely justified. Um, but again, it's not like the pound doesn't have it. We heard that earlier in the week, but I think this one comes up. I mean, I think again, yesterday I had to take in the short. It was an okay runner. I mean, it's only 28. It's not like this is like 90 pips to the downside or anything. This was not some earth-shattering short position in here. But yeah, I mean, those are our tops and bottoms still sitting in this position. Euro yen. All right. Euro yen is chopping back. So we had an area of interest. We weren't expecting it to hold because we had 1, 2, 3, and then this was hit number 4 that based above. So we didn't expect it to hold. And it's funny if you look at this. I bring this across. Look at this. Basing in, came back up, basing in, drop, basing in again, popped, basing in again, drop, basing in, pop, used it again. So it's a level that the market really, really likes, this 130.90 area. We really can't trade off of it. We can expect some basing levels in it, most likely going forward. I would say, although there's another trade up top, and again, we saw this earlier in the week. There was already one out of there, and then there was kind of a second one for Wednesday's number. Because it was tested, I think this is probably not a trade for today. It's going to move another 38 pips. I doubt we're going to move 38 pips from now and be able to enter the trade and be able to reverse this and come all the way back down again. Most likely this is going to be a Sunday night position. A couple of things that I would watch out for is, again, if we can open up in here or drive on Sunday night up into there for the European session, I think that's a decent way to kind of drop. And again, what that would look like in a scenario that we could potentially see is, again, continued kind of grinding higher today, partially because of the Euro news, but also because of the yen. Sunday night happens. And again, we start to hear Sunday about the, Omicron. Record this, record that, record this. France has this other variant too. I think the chances of, them saying that Omicron has peaked in Europe and, we're raising interest rates next week is slim to none at this point. But if we can rally up based off of that news, I think this will be a decent short. On the other side, the hard part about the other side is we keep having these spikes. We had a spike down, we had a spike down, we had a spike down that was lower than the prior spike. So there's probably a hiccup right around this 130.60 level. I wouldn't say there's any great longs out of it, though. I mean, yeah, it popped here, but it's not really an area I'm interested in taking. Really at this point, I'm really looking for, some type of decent base somewhere in this area, right? I don't need this color now. Oops, let's make this a little bit less. Somewhere in this area, man, it's so much different than that other one. There we go. I'd like to see some basing in here, and if we can get a drop and a pullback to it somewhere down, I think there's a decent short. And again, I'm looking to take it down to 130.13. So I'd like it to rally up 131.43 is kind of a short entry for me. And again, overall short targets of the downside, I'm looking at 130.13. I'd like to find a base in here. I'd like to find somewhere to get short this one. If again, I'd like to catch it up top, but once it comes down, there's another short in here that I think we can head back down to. And again, we still have an alert down here. I guess this alert has already expired once. Let's bring this down. Actually, I'm gonna drop it right there. I'm gonna put it right back on again. Actually, let's see. Quartz 162. Oh, it is right. Look at that. 62. Man, sometimes I'm good. Actually, I should extend it farther across. I'm off now. There we go. There we go. Now it's a horizontal line. I'd like to know when it gets back to there. I think there's a short, but that's going to be a next week type scenario. Euro dollar. All right, let's extend these across. I still like 135.78. We're going to extend this bad boy across over to here. We don't need this news icon. As you can see, again, nice little pop. I would assume that this one rolls over once the Europeans are out of the market. There's probably a little short here. If you guys are looking for something for like a 1030 reversal, there's probably a little trade set up here at 113.38. Again, it's been rallying up since the U.S. trader came in. They're like, oh my God, non-farm payroll, it's red. That's bad for the dollar. Bad for the dollar. Okay, it's what has already happened in the past. It If inflation dropped and cut in half, then yeah, I would say it's bad for the dollar. They're still raising, they're still cutting. This doesn't really affect anything. Again, because remember, they're like, oh, the labor market. Well, here's the labor market, right? This is the labor market. So, you know, um, the White House is preparing to ask Congress for more funding for therapeutics. Okay. Let's see, what are they saying here? Vaccines and other COVID-related needs. I mean, they can ask for more vaccines, but if you're not vaccinated at this point, I'm pretty sure you're not going to get vaccinated. I would say therapeutics is important. Again, pump those Pfizer and Merck doses out. They reduce hospitalizations by almost 90%. So, yeah, if our biggest problem right now is not people dying, it's hospitalizations. If you can reduce that by 90%, that would probably be a good thing. So, yeah, therapeutics is great. Vaccines, it's a waste. I think it's a waste at this point. And other COVID-related needs, we'll see. I wouldn't say that's earth shattering. It's, okay. Ask Congress for more, they'll give it to you. But yeah, so if you're looking for a 1030 reversal trade, 113.38, again, 135.75. Just be cautious. Again, it is Friday. Europeans will be out of here in a little bit. And again, we will have profit taking, or at least trapping some of the retail traders in the euro dollar. Pound dollar. Yeah, look at this guy. This has done nothing. It literally came back to the 50. We were looking for entries up here. We had marked this area off, talking about the 61.8. You would have got an entry, and it made it to about 1.5 to 1 before coming up, and then again, and I mentioned yesterday, don't look to trade pound yen for the non-farm payroll data. Not worth it. Too many outside components that could get in there and affect this one. So really, unfortunately, not much we can do with it now. You know, it's kind of boring for a reason because there's really not much going on. I'm hoping next week we get back into, okay, we've peaked. I actually saw an article yesterday that they expected the UK to kind of have their Omicron peak, or kind of, I mean, I guess the flu Rona is surging now, but the peak is supposed to be like mid month for the UK. They're going to hit it about 2 weeks before we do. And again, next week kind of puts us in that range. So, I would expect there's some, probably some positive news. The UK has already raised interest rates once, so I don't think they're the ones that drop the ball for the next raise. Right? I think we got some time for that one. So yeah, I mean, there are better opportunities out there, but if you guys are looking for something, I mean, again, there was a 50% retracement. They only got 2 hours left, so be cautious. I would not hold this one over the weekend though. But right now, top and bottom, I have 157.60, 157.61, and 155.92 are really kind of my top and bottom levels that I like on either side, bracketing this one in. Now, pound dollar, a little bit different, and again, mostly sideways in here. Again, this looks just like the euro dollar, and it looks like the euro dollar for all the exact same reasons. Again, U.S. trader, dollars weak, dollars weak, dollars weak, but I mean, again, they're still going to raise interest rates. They're still going to cut funding. The FOMC, they already knew what the non-farm data looked like on Wednesday when they released their notes. It's not like when they released it. This is the first time that the FOMC members of the Fed, the Fed. This is not the first time the Fed's seen it. They already knew what the numbers were when they made that release, and that's why it's kind of funny that the market's moving the way that it is. But right now, I don't think that I would. Let's see, how much is it? It's another 30 pips. I think the level's a decent level. It obviously was a turning point. It wasn't the easiest candle to bracket off as well. I think if anything, this is a Sunday night reversal position as dollar strength kind of creeps back in as people talk about, rising interest rates. Yeah, I just don't think today there'll be enough time to not only rise 30, get the entry, and then drop the 30 that we need in the other direction. I mean, that requires 60 more pips. There's 2 hours left in the pound. The dollar doesn't have that much. I mean, it would take some blockbuster news that really move the dollar that much. I mean, I don't know. Maybe Biden makes a comment. Kazakhstan. I don't know if you guys have been watching this morning. Kazakhstan has given a shoot to kill order for protesters, backed by Russia, of course. They are, again, we're worried about January 6th here, but I mean, other countries, this is not an uncommon thing. So it's kind of funny. They're like, this is horrible. It's the destroys our democracy. It's like, what happens in pretty much every country that there's things like this. We didn't have a shoot to kill order. They have a shoot to kill order for protesters to put down the uprising. So not a great day to be in Kazakhstan, guys. Yeah, it's crazy, right? I mean, like in this day and age that you have a shoot to kill. And again, backed by Russia was the headline. I'm like, okay. So, yeah. Russia, and if you think about it, I mean, just think about the headlines that we see now. How emboldened is Russia now versus what they were 5 years ago, even 10 years ago, right? But just take from 5 years ago. Um, I mean, Russia is moving troops now. They're backing, crushing with deadly force uprisings. I mean, it just goes to show you kind of what we're dealing with, right? So anyway, I would say again, for me for this one, I'm kind of looking for this one more as like a Sunday night thing. You can see we have all this data, um, tips and stuff like that. It's probably not going to make much of a difference whatsoever. Um, Wholesale inventories, exports, nah, corn, all that kind of stuff. It's probably more of a Sunday night gap trade. And like I said, I do think there'll be dollar strength coming back in. Um, it's just the driving force right now. I think admitting that we're having two raises, I think we go short. And again, I have strong buys, but we got such a large amount of area to kind of cover before we get down to 130, 134.32. Now dollar CAD. So dollar CAD finally starting to drop a little bit. This one has been kind of, like I said, I mentioned it earlier with Todd. It's absolutely decoupled from the dollar from the oil story right now. It is pushing down, but what's funny enough is oil is it's driving, but oil is kind of coming back down as well. So with oil really pushing down, and again, I said this before in the U.S. session, I expected oil to drop lower. Again, this is weakening oil, which should weaken the CAD. And we're just seeing the CAD news kind of come in now over the last hour or so. The non-farm payroll popped it, but again, strong CAD is now beating strong dollar. This is an area where we mentioned profits, will be taken. The last time that price was down here, again, we literally spiked in and popped back out again and formed another base. We're, as you can see, there's a dotted line in here. We're back in the same exact area. So, I mean, I would expect, if we're going to see buyers step in, it's going to be in here. It's going to be somewhere in this range, right about where we are. It should have been short, but this one has really kind of been an odd one to play. Like I said, we usually lately it's been completely pulled around by oil. Today, not so much. Again, this is CAD strength coming in, but we're also seeing oil weakness, which is kind of counterintuitive. So their data today is obviously helping them, the 5.9. And like I said, theirs is very similar to ours. Again, they hire twice as many people back, but it's 54,000 people. It's not like the, 200, 800 that we saw on Wednesday. So a little bit different, but yeah, this is the CAD strength that we talked about. Either of these two levels, for this one, I would not hold this one over the weekend. I do think, again, Kazakhstan is one of those kind of oil-based nations. Their people are pissed off that there's so much energy inflation. And again, this is one of those stories. If you go back to the root of all the inflation of why it started, a lot of it started in the United States, or most of it really started in the United States. I get the climate change argument, but canceling a pipeline that there was billions of dollars spent into that jacked the inflation in the United States, our inflation with energy has spilled over to the rest of the world. And now, again, we have a producer-based nation that is pissed off that the inflation is so high on it. They're revolting. So, yeah, I would avoid dollar CAD over the weekend just for the contagion of that one. So just be cautious. But going into the new week, like I said, big question is we'll be able to break through all the buyers in this level. We obviously do have buyers down here at 126, 126.20-ish level. I think if we can start down here, on Sunday, I don't think this would be a bad position to take. I do think Sunday to Monday we have dollar strength coming back into the market, retracing all this CAD strength. And again, depending on what happens with oil this weekend, I think this is a long going into Monday. So, do I have a great trade set up on it? Not really. I mean, I'd probably be looking for somewhere in there where the testing is coming in at approximately, let's see, 126.36. I'm going to change this to a different color, but 126.36 would be kind of where I'm looking for. Is it like an amazing level? Do I love it? Not really. I mean, it's all right. Like I said, CAD has been a weird one to play this week just because of oil, and it's kind of decoupled itself. It's going in the wrong direction right now based off of what oil is doing as well. So it'll be back. Again, these things are not laws. They don't have to do the same thing. They're proxies, and again, right now the proxy is not necessarily alive. Dollar Swiss. So dollar Swiss broke through. Unfortunately, so we already got in the trade here, and it hit. It took forever. It hit again, went to about a 2.5 to 1 before coming back up and basing. So again, the number of hits, it was bound to break. We were looking for the break. Unfortunately, as much as this came down, it's like, yeah, it's a long. It never got entry. It never came back to grab the level. Nor would I've used this entire level for this base. You got to grab a more near term base. And it would have been much lower. The near term base would have looked probably more down there, not the original kind of level that we took the short off of. So dollar Swiss. I don't mind the top. I think the top is okay, right? This is your non-farm payroll top. I like how it made an attempt to come up again and did not put a higher, higher high in. It's a level that we'll mark off. It's okay, but I feel like we're going to get boxed in at this point. I don't feel that there's going to be enough room to actually make this tradable. We're only talking about 17 pips. We know that we have some buyers stepping in, and we know we have some confirmation here. So I feel like this one is probably going to bounce back and forth again. And like I said, this Harry Potter, it never came back down and initiated. So really, this one pretty much dies. Well, we'll leave it on because, again, we still had basing, we still had touching, we still had basing in there. So in a short, it's got to break through buyers here, and then it's got to break through this level. There's not really a great kind of continuation to the downside, as well as there's not really a great long, particularly going into a weekend. So, I would say right now, big levels, and again, not even fresh, right? We pushed it to the brink, pushed. We got this Harry Potter of a break of 92.57. And I guess there could be a case made depending on what kind of news there is for that level. But right now, dollar Swiss is just kind of compacted. Um, next decent confirmed buying area is going to be 91.11. Um, but a lot of junk in here that we're going to have to get through. Let's see if I run. Yeah, if we run high to low, our 50s are sitting right around here. Right. Again, that's probably where we'll see something. Um, it's kind of right at the 50. It's kind of close, and it's pushed it all the way down. It's all right. I really like the level down here lower, but I would say there's probably going to be fib traders that are stepping in right around this 50 level. Right. I'm going to mark it off. I'm not going to mark it green. Again, if it comes down to that level for European based news, great. If for some reason it opens down there, I mean, if we can continue to drive down, weak dollar today, it would be a level I'd be looking to get long from on Sunday if we can get all the way down there. Um, Needs to move 35 pips today. I don't think we can overtake it today. Yeah, it's just a little bit much. But yeah, watch out for that one. Dollar yen. Excuse me. So dollar yen. Early in the week, we talked about having a Harry Potter. We had an alert set down there, a break of 115.63. You can see it's pushing down today. Again, it's kind of in that same range. We're looking for this one to come down ultimately to 115.33. It's kind of set up right now for it. Like I said, I'd like to get that confirmation in there. It is a Friday, so we will run out of some steam, but it's not a gigantic mover. This one doesn't require a whole lot. It's 30 pips. It's 10 risk 30 in the other direction. So decent setup. We were looking for the break, and again, I'd love for a debase here. I wish this was yesterday, and we had a whole nother day for this one to play out. But yeah, I would look for this one to continue to push lower for dollar yen. Let's cycle through the rest of these. Again, Bitcoin having issues, and again, a lot of this is a dollar story. As again, interest rates rise, the dollar becomes much more attractive because you get something back for it. It's kind of almost like a risk off asset. Bitcoin doesn't pay anything to hold it. It's purely a speculation method. And down at 41, it actually touched 41,000. Actually, it was 49.22, so it broke 41,000. Um, you know, not necessarily the best environment to be in, right? When money is going back towards the big central banks and you get paid to hold those currencies, I mean, it's a lot less risky, right? So that's what we're seeing. Ethereum down 7% again, even harder time. And again, I haven't done all the analysis. I'll probably do it this weekend on my Ethereum, so we can add that into the standard rotation. Bitcoin, we have it a little bit, and again, you can see that level. Look, 1, 2, 3, and then 4 is where we blew through, right? And then came back up and tested it, and it continued its down run. So it's doing the same stuff. It's a little bit sloppier than standard charts, but we'll still be able to do our same analysis on it. And again, we'll go ahead and run that this week. GME, it's funny. It's up 11%, right? Only because it closed here, but then it was all the way up. And then again, if you bought it today because it's up 11%, it's doing nothing but pulling back. So it's kind of a funny one. I actually have a friend of mine. She's quite a vocal being. She's like, AMC. She's like, I'm funding my account, one stock at a time. I was like, okay. I was like, you're trading AMC, and she was like down here. She's like, yeah, look at this. And it's like, again, economy crashes. These guys are also not the best to be in. Now, interestingly enough, bonds is a holding a little bit. It ended up closing higher yesterday, and then we kind of closed down a little bit. Um, bonds are, as I mentioned yesterday, bonds are a very hard thing to trade right now, just because with interest rates, there's obviously a lot in play. Most people, there's not a lot of people trading TLT anyway. If you are, you're doing it in the options realm. You're not really doing ETF wise. And like I said, I think there'll be money driving towards those, but again, they do have that inverse relationship, so it's going to kind of be a weird area. More of a wealth discussion than what we do on this channel on a daily basis. So we're going to kind of let that one roll through. Um, Sorry, mouse head. I was like, wait, why is my mouse not working? It had like a grain of sand or something underneath it. I was like, what is this? There we go. Okay. Driving me crazy. So oil's having a pretty down day today. I expected it. Non-farm payroll number came in right here. And again, it is kind of it is still a demand play. We did touch up into the 80 40. 80 46 is where we got to. 80 50 is where I thought we were going to have some issues with it. Not surprised at all with the short today. Again, you could have taken this one off of this sell level right up top, right? And again, would have been completely justified, based, pulled up, and again, right at news time. It is down today because, again, the forecast was over 400,000 people were going to be having jobs, and it was only 199, so it's half as many people. Again, we've had the big burst all week. We are due for profit taking. This is what it's looked like. So we were literally looking for, an area to, some type of data area news. Right now, I'll extend this across. Not surprised, but unfortunately, the trade's already gone. It's too late to trade it right now. This would have been a non-farm payroll short after the number came out. And remember, this market closes early, so we really only have a couple hours left to go. And you can see, I do think it. Again, it already has bounced off the buyers here. It's got some buyers a little bit lower at approximately 78, 78. It'll be interesting to see what the weekend does to oil if we get some, kind of a continued push forward. OPEC has had a blast this week, and like I said, OPEC has made plenty of money as this has rallied all the way back up again. Um, Kazakhstan situation probably is adding to this a little bit, but for the most part, this is just profit taking from such a huge week. I mean, we talk about January 3rd up. Let's see what do we got here. Just this week, right? It's a $6.25 move this week in oil. So again, those weekly positions, right? Those weekly positions, great week for oil. And again, a lot of impulse corrections all the way back up, boom, boom, boom. Question is next week, do we continue to move higher? Can we get into the 83 range next week? But again, I think this has justified the sell off. It makes complete sense today. Unfortunately, it's a little bit too late to get in if you're not already in. Natural gas. So natural gas spiked. As you can see, we were talking about selling in the 392, and it did. It came up a touch. That it kind of pushed it up. I do think natural gas, now that it's pushed it to the brink, I don't think this level holds again. And it was already the 1, 2, 3. This will be hit number 4. Natural gas is justified to go higher. Todd said so. Yesterday, Todd said that it was 6 degrees. Today, without the wind chill, was -2 in Chicago. So yeah. So natural gas should be booming. I think next week will be a good week for natural gas. I know it is a little on the higher side. It's not up in the $5.60 range that it was months ago when it was warm out. Now that it's cold, the prices are lower because again everybody's filled their tanks at the high prices. But the people that were able to hold out did. But this week with the blistering cold, always tends to be a good fundamental factor for natural gas. So, right now it's not, you're not going to want to hold natural gas over the weekend, but I would say where natural gas is, I don't think this level holds. I think it goes higher. I think next week we start testing the 4 level and maybe even up here to where we do have actually a decent test. And again, it's a gap fill. Up here at the $4.06. So decent run for that. Now gold. Okay. Gold had an interesting trade right at non-farm time, and gold is basically now back to where it was before, not really doing anything. -3 here, yeah, Sean. Yeah, yep. I don't like the cold. It's all right. Half my trees went right back up again, and then they came right back down. So here is gold. We talked about gold yesterday, and again we were talking and looking for levels. Again, looking for the big push minus the non-farm candle. What we had drawn yesterday was in this level, and as you can see, the non-farm payroll spike. Let me extend this across. Hold on. How about this for spikes? And I'll move this out of the way. Right there. So how about this here? Right. Look at this. Look at this candle. Not only did we touch the bottom, right, and it should be there. I'm not sure why it's not drawing it, but right. Our 1 to 3 is right there. So we opened, we came all the way down, we touched the level, and we came all the way back up again and busted us out all in the same candle. So for those of you that were in, are here yesterday, we talked about the 1782. It's been a level. I mean, it's been out there for a while, right? We had it from over back in here. We were looking at it, so it's nothing new, right? We can clear some of these off now. Nothing new. It's off. So not surprised that it's doing what it's doing now. I would say gold is probably a bit more bearish next week. I wouldn't trade it today. Remember, this one closes even earlier than oil. It's only got what, two hours to go? 2 hours 15 minutes? Or no, 1:30 on this one, right? 1:30 versus 2:30. So it's got a couple hours to go. Again, not surprised if you wanted to trade it during non-farm. It's already over. It came down, grabbed their level, went up. The 1782 is probably a decent level for one more. I mean, it was able to withstand that non-farm payroll push. I would expect it today that we push down and we kind of end somewhere out here. I would say there is a long opportunity next week, but right now, again, trade's done for the day on a Friday going into weekend. Nah, gold to just kind of grind its way down. It's not worth the risk that you guys are going to take in it, especially holding it over the weekend. Silver looks the same. Silver, we had a Harry Potter we were looking to get into here. We're looking for a drop. We don't have the entry yet. Again, we want a push down, a base, and a pullback. We're looking for a break at 21.97 to go lower. Not there yet, but again, do you want to hold silver the weekend? Probably not. Do we want to get short Sunday night once we know there's no craziness? Yeah, probably a good idea for silver, right? Um, Kind of the same analysis we did earlier. Now VIX. So VIX is pulling back down again, and I expect VIX will. Again, non-farm obviously spikes the VIX a bit. I expect that it comes back down and we close lower. We're probably going to get into this range right now. There's a lot going on. People are like, wait a second, how do I read that number? All the indices were green, right? They were all green before non-farm, and then bam, got slammed down and turned red. Dropping a lot of these. Now, these would have been interesting to play at the open. I mentioned, getting short. Getting the entry was the hard part, right? So your 945 candle was here. Here's your 930 candle. It hadn't quite pulled up into a zone. It more or less did a full retracement back again. And again, psychological number or psychological level, 100% retracement back again, right? Um, and again, there's your 945 candle pushing down. So talked about it, although this one would have been a little bit more challenging because 930 is right here. That's where we opened. But again, you can see it driving lower, and I think it probably does stay lower today. But yeah, there was the initial push forward, and now we're seeing the retracement. So I'm curious. I don't know. I'm really interested to see what happens at 46.68. Okay, we've already had the one trade. We had a second spike into it, and again, we weren't looking for that second trade. We did get front run before the level. I'm kind of curious to see. This is kind of the scenario that I'm wondering is if we kind of rally down and then like at 3 o'clock we do a little bit of a pop up again. Is kind of what I'm wondering. I don't really love that. I mean, again, the top zone we know that it's there. We know it's a psychological level. It was 4,700. A lot of reasons why you would have taken the short from up top. The level lower here again. It's been tested. It's not fresh. Again, we actually technically pierced it here a little bit. Um, I do feel like if we stay negative all day, the end of the day, we get a little bit of a rally to close this out. Is there going to be enough traders in the market though for it? That I don't know. I don't. I want to say no. Right, like I said, we have the FOMC hangover. We have non-farm being kind of negative. It's like it just seems like nothing wants to work out for the indices 10 this week. And again, knowing that we have the sellers up top, I feel like we'll get a decent bounce at the end of the day as we get profit taking that comes in, particularly if we're negative all day. But the reality of the whole thing is it's down 0.13. It's basically almost flat. And all it's doing is kind of chopping forth back between those two levels. So 46.86, I don't need that guy. I'll remove that just to keep it clean. 46.75. Yeah, I feel like this will come down and bounce. And like I said, I don't love this level. Like I said, here was the original trade setup. We wanted off of it. And again, we've pierced it. So it's not a long for me, but again, I would assume that that's what we're going to have for today. It's just a Friday, so I'm not super interested in it. NQ, kind of the same thing, right? It retraced all the way back again, grabbed the same sellers that we saw earlier, right? Came back up to that, 15,800 and is driven all the way back down to the same spike. So Really, the same exact trade, right? Full retracement back down again, right? News spike down, parabolic move right back up again, and then we retrace back down. So, I would say, 15,600 is proven that it is a true psychological level. It's already taken one hit off of it. It got front run here, but as you can see, we don't really have any buying on this one until we get much lower. This could be an area for next week early on, but again, I don't think we're going to get down there today and have enough time back again. I would say most likely I would stay short with this position. I think if we're going to take a bounce, I think 15,600 would be where we were going to do it, and it would be like a late day. It would be like here. It would be just a little bounce. I don't know that it's going to be that tradable for you guys. Unfortunately, like I said, FOMC, a complete change in economic policy, raising interest rates, balance sheets, bonds, non-farm payroll disappointing. Um, there's just not a whole lot there positive for this. Even though Apple is technically in the green right now, right? Although Apple, it's in the green, but it's obviously pushing down. So again, that's going to turn negative, which will also stimulate it. I think this continues to go lower. If we base the way buying opportunity off 15,600, but I don't really love anything until we get much lower. And even then, when we talked about this level before, um, it's okay, right? It's okay. It would be more something we would look at 15, and that'd be a Monday morning open. YM also chopping all over the place. Now, YM didn't make the full retracement back again, but it did drop a little bit lower. It looks like its 930 candle was really the big whipsaw in this one. So, I mean, if we bring it all the way down, yeah, you can see it came back up and stabilized a little bit around there, but it did break through the 61.8. So this would have been a hard one for fib traders. There's probably some fib guys that lost some money today. But interestingly enough, again, 16 or 20, 36,200, that same level that we've been basing and using as a base over here, was the top. Now, would you have traded off this one? Probably not. I mean, it's a level. We've known it, but again, the volatility would have been so crazy at that point, you may not have gotten entered on it. Um, I think 36,000 is obviously the next target. I mean, that's the next big line. We're at 36.57. I don't think this one has any issue coming down. Um, these are the old targets that we had sitting on this one. Geez, and in reality, look at this. The last time that we were down here at 36, we ended up slicing through it. So there's not a lot of pullbacks. There's a little pullback. So it looks like we got a bit of a pullback here, right? A little bit of a pullback at 36.41 to 36.024. I'm sorry, 36.041 to 36.024. Little bit of a level, but after that, besides the 3600, we got room to run all the way down. So, this is an interesting one. Actually, look, we sliced through it. So yeah, so those guys are now. Well, we can still use that for Harry Potter. We can still, if we base in there, we can still take a short out of that one. Um, but we know we're clear from here down. Hmm. So, all right. So what we're looking for here, we're looking for some type of basing in this level at 3600. Okay. Um, Question is, can we get down there low enough today, or is this a Monday? Hmm. All right. So 1023. We're at reversal time. We'll see if this comes back again. There could be reversals technically off either of these two levels in here, and again, it makes sense with the time that we end up back in here. If we continue to get this push to the downside, what we'd be looking for is some level of basing. So what I would say is, really, I'd like to see it break through. So if we can break through the bottom of this candle down here at 36,013, you're going to have support and resistance traders stepping into this one. They're going to see this and be like, oh, here's the low. If we break that, we're short and go low, man. If we break it, go low. I kind of want to see them, if we can get a trap in here. And again, it's a decent level that if they get in and start shorting, it should pop up and we may be able to use this old level at 36,024. So I kind of want to know when this area comes in, when it hits, right? Um, let's see. Short trap, YM. Expiration time on the 7th. Oh, here. We can have it expire right there. It's not straight. It's like, wait a second, not straight. That was close. Okay. That'll be a support and resistance trap. So kind of interested in taking that one. And again, this is just hypothetical speaking right now, but I would say that if we kind of get that pop, we're either going to have the ability to take a short from this level. And let's see what it looks like. So something along those lines there, right? So here is our potential kind of base and drop. But if we go down and we start the base in this level, we may need to use the lower level. So I would say there's probably a short in either one of these two levels. But I kind of want to see how they enter. So again, I got the alert in there. We'll see if it alerts. And again, if it rolls off the top of this one being 10:30 in the morning, then again, we don't get into either of those two trades. But I think both of them are decent. I think the negativity is in. VIX is up. If we don't get a reversal at 10:30, I think we continue to push down. I think we take a short from either of these two levels. Russell, let's see. Yeah, Russell, look at that. Russell came all the way up and then all the way back down again. So we don't need the fibs on that one. Those got blown through. And again, look at this, all the way up, all the way back down again. And Russell picking up steam. And Russell really has nothing to slow us down until all the way here. So Russell's got more room to run. I would not be I mean, in reality, I could take this zone and bring this down probably to like that level. So yeah, I think Russell downside target today is really down here at 2176. Because again, we have that one touch of buyers here at 90 at what is it 2192, and then we got nothing. We got nothing slowing the sucker down. So I think we got some more room to run the downside on Russell. Now again, maybe we find some buyers in here, but again, I have to see what the volume is. Apple's dwindling. Look, Apple starts to push below its low. Looks like Apple shorts will come in. Looks like Apple shorts are going to come in at 171.50 for today. I'm going to put that alert on there. Right? That'd be one of those. Apple is now, making lows on the session, and Tesla are already kind of not at lows, but this candle had lows. So let me see, is oil doing? Yeah, oil's chopping back and forth. Yeah, these buyers are giving it a little bit of a fit. Gold is holding again. Gold is basically totally flat, zero. So yeah, let's see, where's dollar? Dollar was able to go through, although it is hiccuping a little bit. Let's see. Looking for dollar reversals here. Oops. There's the CAD yen play this morning. So look at this. CAD took this the immediate spike back and forth, and now it's pushing back up again. So CAD's getting a little bit of strength in there. Let me see. Yeah, it's at that level right now, and it's kicking back a little bit. I think the market's going to run out of steam on us. If we can't make another push down, if we start kind of teeter-totting, I think we're going to run out of steam. Everything's going to close early today. Not like officially close early, but like, you know what I mean. Movement is going to basically cease to exist. YM is making an attempt. Go YM. It's 10:28 and everything is starting to pull back a little bit. Question is, can this hold? Can we hold? So it's close. All right, 10:28. Let's go ahead and do our drawing for today. Let's do our little giveaway, our pip chip giveaway. So Neuro won yesterday. So Neuro will be going for 100. Everybody else is in for 25 for the day. Ernest Marina. Where's Debbie? I know Debbie had snow again because we got snow, and I think they got more snow than we did this time. So I don't know. Debbie, are you out there? Let me see. Let me see if I can find Debbie in the chat. Nope, Debbie's not here. So, all right. And then Sean tried it first and then realized that I hadn't put it up yet. So, all right. So Debbie's missing out today. Can't help her. Let me close it down. Winner of today's drawing is Neuro. Well, Neuro had 4. What was his percentage? What was Neuro's percentage? 30% chance. Come on. Guys playing some statistics over there. Neuro gets his 100 pip chips. Let's see. Where is Neuro? Look at that. So Neuro goes into Monday morning. going and he gets his 250. If he wins on Monday, he gets 250. 250 puts him within 100 pip chips of Ernest. Look at that, guys. Number number 4, and number 5. There is a battle going on right there. Look at that. Score 1 for the bad guy. I know, right? Monday, if you can win, it's 250. And look at that. Add 250. You are literally within 100 chips of Ernest. So he better be careful next week. Stopping him yesterday affected him. So um, let's see what we got. Pal speaking on Tuesday. So it looks like Sunday, Monday, we don't really have any big news. Let me see what we got. Low impact. See if there's any potential for Sunday night movement. Man, inflation gauge for Australia. Yeah, there may be some Aussie news. And let's see. Not tons. Retail sales Monday night for Aussie is really about it. Yeah, so eh, we'll see. There's not really a whole lot of news out there. Final wholesale inventory numbers nobody cares about. So yeah, whatever trend we start off with, we should go at least 24 hours on Monday. So yeah, set up those Sunday night trades. There should be some decent ones out there. And like I said, the only thing moving right now is dollar CAD, and most of it was in the 24 hours before that non-farm payroll release. But look at this, 34 pips in the pound yen. So dead 3 minus 4, 31, 32 minus 3, nothing. 24. It's okay, right? But these guys, and again, European strength based off those news. Look for the retracement in this one next week, right? Look for a euro pound down, and again, some decent movement. So, with that said, you guys have an awesome trading week. Remember, things are probably going to dry up. Don't hold your positions over the weekend. There's a lot of stuff going on. Again, shoot to kill orders in Kazakhstan, not something you want to really mess with. Again, ECB making some comments about, oh, it's going to fall this year. Yeah, transitory. We've heard you say this before. And then again, the White House is asking for more therapeutics. So, you know, inflation hits yeah, look, see, Eurozone inflation hit a new record high, 5%. So they're talking about it. Yeah, it's out there. So you guys have a great weekend. Thanks for joining me today. And again, I'll catch you back on Monday morning, and we'll see what kind of weekly trade setups we can get then. With that, going to shovel some snow. I'll catch you guys later. Take care.